Deepak, let's talk about markets in that sense. The story is domestic liquidity, which is, of course, I mean, what as an entrepreneur you're betting on as well when you start that mutual fund, and that's pushing markets to, I mean, I think new all-time high. Hop, skip, and jump away. What's the sort of assessment, Deepak? Now, markets near term from here.
That's interesting that you say near term, because I think we're all, I think, kind of on agreement in the long term that things are going to be still better for India in comparison with the rest of the world, perhaps. But the near term, everybody's more scared right now. I think most people I meet are still scared that the markets are overheated, that this is not the right time to put money in the markets. But the markets themselves are showing something else. There's a behavior that says, well, we want to put in more money. So there's more money coming into mutual funds. There's more money coming into equity. Domestic flows are strong. I think while domestic flows are strong, the flows are going to dominate the discourse, right? So to a certain extent, earnings and numbers will kind of be secondary, but eventually they start playing a role. So your problem is your price to perfection in some stocks, but not so much in the others. There are lots of stocks which are trading at perhaps levels they were trading at 3 years ago. In fact, the biggest, HDFC Bank, for instance, where we might have a position. So I think that that is there's a dichotomy of stocks. There's a lot of smaller cap stocks which are more expensive in that context. But I do think there is a lot of cheap stocks available in the market, and there is definitely something that to be said about finding good opportunities here. I think until it comes to a point where everybody is jumping in this euphoria, and literally that euphoria is translating into 30,000 Nifty is going to be here soon and all that. I think that's the time when you'll probably see that the markets top out, if you may. And usually it's liquidity that takes it away. So it's either a big IPO or a big global event that takes away liquidity from India. That I think is going to be the cause, but it may not necessarily be valuations.
All right. Hi, Deepak. Good morning. First of all, congratulations on the big development for you as well as your team. And it's been great being in touch with you, Deepak. Even pre-Twitter days, when you call up and, reach out to you, you'll explain things extremely simply. So kudos to you, the team. And I believe market takes you to other aspects of a person as well, whether it's the dancing or driving down to the coastal part on the beaches. Well, I've looked up to you on that. So enjoy life and wish you well professionally as well. Let's focus on the markets then. And one stock I wanted to address, if you track it, is Medi Assist. They've gone ahead and they've done some inorganic growth. They've picked up Paramount TPA. Valuation-wise, it seems attractive because they bought it at around 2.5 times, on a sales parameter. And Medi Assist itself trades at more than 5 times. Any view on Medi Assist or this theme?
No, I'm sorry, I haven't tracked it at all. So I have no context of the numbers. But in general, let me say that if it's the 2.5 times sales and they are valued at 5 times sales in the market, this is actually a boost rather than a bane to your list. But sorry, I don't have any more fundamental news to give on this topic.
Okay, all right, got that. Because 2.5 times sales is what they've done it at. They themselves traded around 5 times, and on a PE basis as well, Medi Assist trades at more than 45 times, and this asset has come at less than 40 times. So we'll keep that aside. Let's focus on a couple of themes. Yesterday, we had the metal index that came back. Now, data points coming out of China are still extremely weak, but the street is willing to look ahead, and balance sheets are in far better shape. Anything you like from this space, either ferrous or non-ferrous?
No, we're actually away from metals because I think the dynamic here is cyclical, and I don't think the cycle's meaningful enough for us to take opportunities. To be fair, I find more opportunities outside of this space in terms of growth. The cyclical story is not very, not really exciting right now. We don't even see a major special situation in metals, in any kind of metals right now. Though I think, inflation numbers all over the world will cool. And I think that will provide a cap to overall prices. So I think not very interested in the metal space right now.
Deepak, what about the refiners? There's so much going on right now. Crude has climbed back to about 81. And there's enough chatter about what happens. We're getting to state elections, whether there will be any price hikes at the pump level at all or not. But what's your overall sense? Do refiners, IOC, BPCL, HPCL, Do they merit a place in the portfolio?
Yes, definitely. I think there is actually quite a big demand for. I think the idea over here is not the refining piece, but the oil marketing piece. The oil marketing piece has legs in that sense, because you don't have that much of a demand change, but the supply characteristics are changing, and to a certain extent, I think oil marketing companies will benefit. I don't think the refining game is quite as much in terms of our interest going forward. I believe honestly that we have some positions in oil marketing companies, but not meaningfully in any other of the core refining companies. The idea over here is that, if you look at the crude prices over the last 2 years, despite Ukraine, despite the wars everywhere else, we haven't seen a major spike in crude. So it would have otherwise gone to 140 or 150. And it was 140 in 2008 also when there was a crisis. So right now it flitters between 70 and 90. So I think the marketing companies will make money in the long term, make a lot of cash flow. And to be honest, they're not that expensive. There are few non-expensive pockets in the market right now. But overall, I think refining is not really the place to be. We own Reliance, but it's not because of the refining arm. It's mostly because of Jio and the retail arms.
Well, speaking of Reliance, because we are getting to the AGM, you led us to the next question, and you were saying you don't own it so much for the oil and gas or the O2C business, but for retail and telecom. What would be the watch points for you in the AGM this time around? I mean, aside of the big announcements about any sort of business reorganization or demerger, that aside, what else would you watch for?
That's a good question. Actually, their AGMs used to be a lot more about announcements, but the last few years, they haven't been quite as much in terms of big announcements that have come in. There have been good incremental announcements. So we'll have to wait and see. They might throw a surprise out of the hat, or it might just be like it's just going to be bigger and better in that context. They have, in the last few years, accumulated more debt than their cash. So earlier they used to have almost as much cash as their debt. So there is a debt increase. But to be fair, if Reliance doesn't increase its debt, then who else will? The whole industrial lending has been stagnant for 4 or 5 years now. But I believe, at this point, I'll only look for surprise announcements. I don't think there'll be much more coming in from there. Of course, they've also applied. I think they will also probably be getting an approval for a mutual fund. That would be Geo Financials. So looking forward to that as well. I think it'll overall, I don't expect much, and I hope we'll be surprised on the upside. But the bias is that we own the stock.
Right. Deepak, I just want to put out a tweet which kind of went viral yesterday. And this is on the SME space. I'm sure that you would have kind of seen this as well. It'll come up for our viewers. This is a gentleman called Akshay Jogani who put out this tweet. He said, the resourceful automobile SME IPO is crazy. 2 Yamaha dealership showrooms, 8 employees. They asked for 12 crores and they got about 3,000 crores, 2,700 crores in bids. Market cap at 31 crores at IPO price and a net worth of 1.5 crores. Is no one asking what the terminal value of 2 dealership showrooms and 8 employees is? Of course, I mean, the fact is that they could be raising this money to expand, open 10 new showrooms. We don't know, but we have to go into the details of that one. But I'm just using this as I'm sure you must have seen this on social media, and I don't know if you had any thoughts. There are 2 parts to it. One, of course, is the approval itself. Now, the SME IPOs are not approved by SEBI; they're approved by the exchanges. That's one. And second, of course, is the demand. That's just, liquidity, right? What do? You ask for 10 crores, you get handed 100,000. You can. Yeah, go on, Deepak.
Prashant, so to be fair, we're not handing them any money. It's all what happens in the IPO space is you keep your money in your bank account and then you apply. And then maybe you get some, you don't get some, but the money never leaves your bank account, right? So you want to bid for as much as possible, whatever cash you have in your account, simply because that just increases your chances ever so slightly of getting some kind of allocation. And that is what's driving a lot of the IPO market. And that's what's driven a lot of the IPO market in the past. In fact, at that time, people used to take loans to keep money in their bank accounts. so that they could bid for higher numbers. So you would get this 1,000 crore IPO getting 4 lakh crores worth of subscriptions. It's not 4 lakh crores. It's just like temporarily borrowed money from NBFCs until RBI put an end to it, and SEBI eventually also put an end to it, saying you can't do all this borrowing money, like 100 crores borrow for 2 days and then apply for an IPO and all that stuff. So now the numbers are smaller because the IPO is smaller. Secondly, I'd say the big thing here is this is what the SME is for, SME exchange is for. It's a small company. It's less than 25 crores in paid up equity or something like that. It is trying to grow. They need to raise money. Now, would you rather have them raise money through debt or go to some private financiers or venture capitalists, or come to the markets? I think coming to the markets is actually the best thing to do if you want to raise equity, because you will have a layer of transparency on top. You will have to reveal your numbers at least once in 6 months for the SME exchange, but you'll also be able to participate in growth. A lot of SME companies, some companies that we know of, say E2E, which listed in the SME exchange at, I think, 50 crores or 60 crores when it started. Today, it's valued at, say, 2,000 or odd crores or close to that in the market. So I think there are companies that start off as SMEs and then build up from there. Yes, we could make a meme out of this saying 2 cycle showrooms, only 8 employees. But honestly, it's not the number of employees. I think they make 1 crore of profit and the value is 31 crores. So effectively, they're, just the cash returns on this 12 crores that they raise, if they just kept it in a bank account, that would double their profit pool or go give a significant boost to their profits. So the profile of the company changes, and of course, hopefully they will give a better return on equity. I have no comments on the company. I haven't analyzed this in meaningful detail. I'm not outraged about it. So I think
I was also not outraged, but I wanted to ask you if you were outraged, because it just seemed a lot of outrage all around. I mean, a lot of exclamation marks, etc. But I mean, it's not the terminal value of the 2 showrooms, right? I mean, they could expand whatever. And the idea is to boost SMEs. Of course, there are lots of winners and wealth creators in that space over the last couple of years. And like in any market, in any segment, there are also disasters. So one needs to exercise caution here and on the main board equally. Point taken. It's an interesting space, and we'll come back to this in a greater sort of way later, Deepak. But thank you very much for joining us this morning. Really appreciate your time, and once again, congratulations on the mutual fund license.